Hello Zbox traders, this is another week ahead market analysis with me. My name is Ali. Today's video is covering key insight that could impact your investment decision. Let's dive into the week. The inflation in the United States has generally been falling, but progress toward reducing it to the 2% target has stalled in recent months. The war and tension in the Red Sea, the threat of Yemen have forced ship owners to change longer routes. They have to pay more for the transfer of energy and goods, and during this period, it will definitely affect the price of goods and services. The consumer price index year over year rose to 3.4% in December and has changed about 3% since last July. There was somewhat better data for the core rate, which fell below 4% for the first time since May 2021. Inflation expectation this week show the stability of the monthly and core inflation data and year-over-year decrease in inflation. According to the analysis, we have about shipping problem and the increase in oil price in the last 2 months. We expect an increase in the print of these data again. This week's calendar is busy for US dollar. On Tuesday, inflation data, CPI. On Thursday, core retail sales, which a decrease of 0.2%. Unemployment claim index with 280,000 claim last week and 220,000 claim this week. Philadelphia Production Index, also PPI data on Friday. It will catch the attention of traders. It is true that the data have downside trended over the past few months, but they showed that inflation is still likely to be sticky. However, Fed officials have been adamant that interest rate cuts may take some time to materialize. This gained the US dollar, and investors moderated the possibility of an interest rate cut in March. This week's data is very important, and any upward surprise can put downward pressure on gold. Okay, on the calendar page, other important data will be released this week for the British pound, inflation data on Wednesday, and economic growth index for annual and monthly perspective on Thursday. Inflation in the UK fell sharply in late 2023, but has now picked up slightly. The continuation of the downward trend of both the CPI and core CPI in January is not good for the pound and will prompt the central bank BOE to change its monetary policies as soon as possible. As BOE policymakers continue to grapple with market expectation for an early interest rate cut, investors, traders may raise their expectation as inflation unexpectedly declines. But unlike the US, it is not all about inflation. Britain's gross domestic product fell 0.1%, rising fear of an economy slowdown. Data for the fourth quarter of 2023 due out on Thursday. It is now expected to show that the UK economy avoided recession and grow steadily over the period. Okay, let's compare the macroeconomy of pound and the United States. In Zbox terminal, in comparison page, we try to collect the economy data of important countries of Forex market. You can choose from around 25 to or 29 pairs here, and you can have a general view of the economy power of the two countries by comparing them together. The data help you to examine the general trend of the currencies, which helps you to find the trend of the currency pairs. I mean, midterm and long-term trend. And as you can see, the decrease in inflation is evident in the UK. Inflationary data has decreased and remained stable in some months. The core retail sales data is completely bearish. We can see the trend of the employment rate a little deeper. The upward trend in recent months will increase the downward pressure on pound. The downward trend of economic growth and on the other hand, the rise of several months for the US dollar. You understand what I mean? You can consider a downward trend for the pound dollar simply. Well, let's go back to our calendar and analysis. This week, we also have important data for the Japanese yen. On Thursday, we are waiting for the release of GDP data for the last quarter of 2023. After a sharp and unexpected decline in the third quarter of last year, economic growth is expected to have improved by 0.3% in the final quarter of last year. If Thursday figures are disappointing, doubt about the strength of the Japanese economy recovery are likely to persist, as recent data have been rather mixed, give weak consumption. However, increased export probably boost GDP in the fourth quarter. In my opinion, if this data is published worse than expected, it will strengthen the US dollar. I talk about the US dollar that has a positive sentiment for itself this week. So we can find some great trade opportunity on USD and a strong currency, mixing a strong currency with some weak currency, and it it could make a good opportunity for trade. At the end, as usual, at the end of the weekly analysis, let's check China, Australian, and New Zealand dollar. What we all know is that China's central bank still remain in its easing policy. China is trying to increase its economic growth and export process when other countries are in hawkish policy. By injecting money into their own economy, which has been successful to some extent, but now it has faced many crises. They heavy crises that have pressure on Australian and New Zealand too. Accordingly, we are sure that the Central Bank of New Zealand and Australian will have to be the last countries to start cutting interest rates because their inflation is tied to China's economic growth. This week we will have Australian jobs data on Thursday. The data is expected to be positive and can partially reduce the pressure on the Australian dollar. Let's take a look at the table of central banks. The table remains unchanged and we expect the central banks to keep all interest rates. In their own statement, they all talk about monitoring the data for a longer period of time because they need more certainly to reduce inflation, job, and wages. For this reason, all traders focus on inflation, growth, and jobs data more than before. Finally, let's quickly look at the COD data. We're generally looking for a big change on a speculator contracts. We check the net position and change from past week. Less than 2,000 contracts change is a normal positioning in CFTC market, but over of this amount would be a sign of sentiment change on an asset. Example, in this week, we record lower than past week net position on AUD by decrease about 13,000 of contracts. It contains 2.2 thousand of more buy contracts and around 16,000 new sell contracts on AUD. Well, it shows a huge short sign and pressure on Australian dollar. By looking at the AUD USD chart, it's pretty clear that the smart money, I mean the speculative traders, selling AUD from February 7 and also from past week February 2nd. We know that there are a lot of sellers in AUD. They can keep their position and keep pressure on AUD, or they can close their position to taking their profit. This upside movement is exactly for them. We knew their speculator behavior. So in this week, by any positive surprise in Australian economy data, AUD can get new buyers, also reduce old sellers. All of them can brings the AUD price higher, and any worse than expected can make a big new short movement on this asset. Technically, you can find and predict next move to break the last support area at 0.652, and it can start new fall to 0.637 area again. It is just as it's just an example to how you can use COT report, and this is not a trade signals. Uh, Back to the COT report page, we said we are looking for a big data and big chains. Big change. After the Australian dollar, we see the Canadian dollar with a decrease of 5,300 transactions, which was actually based on the closing of 6,000 buy positions. Also, 28,000 new sell position for the euro could make great effect on the big effect on the euro price. We will have some trades on the British pound, US dollar, New Zealand dollar, and Canadian dollar this week. It's better to be a member of our Xerox terminal so you don't miss these offers. And finally, we see positive gold net position by addition of 9,000 buy position and closing of 4,000 sell position. It could be interesting too. Near 14,000 position have been issued in favor of gold. If these positions are held, they will increase the price of gold, and if they are closed, it will bring downward pressure on gold. Accordingly, I am willing to sell gold on better than expected data for the US dollar this week. It is possible to find attractive, nice opportunity for this trade. Okay, well, I think this video is end, and we will be in touch as soon as possible with our trade idea. So don't forget to subscribe our channel or your channel. Good luck everyone, and have a nice week.